Hello, ladies and gentlemen. Good morning to you, and I'm so excited to be with you here this morning. Let's quickly confirm that we are good to go by typing hi in the comment section if you can see my screen and you can hear my voice clearly. I would like to see some feedback in that regard. Kindly type in hi in the comment section if you can see my screen and you can hear my voice clearly. So let's see what we have in the comment section. Okay. All right. Frigga. Okay. Good morning. 869. Good morning to you. Laukata. Hello. 610. All right. 587 6166. Vivi. Good morning to you. 146. Roslan, how are you doing today? Hey, Carrie, good morning. Glad to have you around. Yes, I think these are for positive feedbacks that we are good to go this morning. I'm so excited to welcome you to another promising session on the Extreme Speed Live. My name is Sharif Daramola, and as usual, I will be your host for the next 1 hour, where we shall be evaluating the financial market using technical parameters to identify trading opportunities lining up for us today. And for those who are joining us for the first time, you're welcome on board, and I hope to see you through the end of the session. What we simply do here on a daily basis is to gather here in the morning like this in anticipation of the New York session, review the market we have been monitoring since the beginning of the week, identify trading opportunity, and position ourselves in such a way that we can catch any potential opportunity during the New York session. It might look a little bit complicated at first when you join, but I assure you with time, when you get to stay around with us, be with us through the end of the session, join us on a daily basis, 10 a.m. UTC, you will get to understand how this works, and at one point, you will be able to make your individual decision using the information you have gathered here. So once again, I welcome you all. Yes, it's the last trading day of the week. That's the last trading day of the week, and it's very likely we start seeing some reaction in that regard. Obviously, what we are going to be doing here is to position ourselves on how to manage whatever trades that we are in right now. So in that regard, we shall be diving right into the session. Well, the first thing I would like us to look at, remember yesterday we were anticipating some couple of macroeconomic events, and I was able to bring out a summary of what happened yesterday. In fact, we had mixed reactions to that event. So we have the durable goods order and the non-defense capital good order, which was published by the U.S. Census Bureau. And what we saw for the durable good order was not that impressive at all, as we have the data tumbled by 4.5% in the month of January, which is against the previous data, which reflected a growth of 5.1% in December. This is a woeful reading coming in with a negative variance of 0.33, which is way below expectation and the largest drop since April 2020. So this reading is expected to incite a bearish signal. However, we had the opposite on the non-defense capital good order, which of course exclude aircraft. And as we all know, this measures the cost of orders received by manufacturers for capital goods. And the readings came in yesterday. We had a 0.8% growth, which is the largest gain in 5 months, as against the previous data, which came in at minus 0.3% with a positive variance of 1.02. This suggests that business spending on equipment picked up at the start of the first quarter, and this development is a positive signal for the US dollar, as it ended a 2-month straight decline. And this development reflects higher prices for last month, which turns out to be a key indicator of investment and trust in the US economy. So what we are going to be looking at today is to see how the market has actually reacted to these fundamentals, as we really do not have any macroeconomic event coming up for today. So we are going to be looking forward to structures that will be guiding trading activities for today. And obviously we want to be seeing how participants in this market has been reacting to the current structure. So as usual, the first commodity we are going to be looking at today is the US oil. And on the US oil, we have been having a choppy situation here in the last 24 hours. As you would remember that at the beginning of the week, we were fortunate enough to be able to catch that consolidation phase that we noticed here, as we saw price action continue to range within the $76.68 level and the $75.80 area. And you all know what we look out for whenever we do have this kind of flat channel. We wait, remain patient, and wait out for price action to either break out of the resistance point for buying opportunity or breakdown of the support level for selling opportunity. And in fact, what happened during I think the first couple of hours into the New York session yesterday was quite interesting, as we saw price action break down that support level a couple of times to give us a bearish signal. But something interesting happened following this bearish signal. We begin to see how the $75.25 level has been negating all attempt by the sellers to push price to the downside. And what we saw here was rejection multiple times here, which lasted about 5 to 6 hours before price action climbed up again. And I shared this on my public platform, and I also told us that we are expecting a bullish momentum based on the current structure that we have here. I will be talking about that in a moment when we scale up to the higher time frame. So we saw the breakout retest of that bearish trend line. We saw multiple rejection of the retest of that trend line here, which incited this bullish momentum that we saw here. So we were able to trigger a buy position above the $75.80 level after identifying something here that looks more like a reversal pattern in the form of a double bottom structure. So with the $75.80 level serving as the neckline of that reversal pattern, which happened to be the support level we identified yesterday, a position was triggered there, and currently price action is running with about 74 pips in profit. And if you had been part of this opportunity here, kudos to you for being on standby to catch that move, as you will currently be running with about 75 pips in profit. Now, the next thing I'll be advising you to do right now is to secure this current position by moving your stop loss accordingly. And at this particular juncture in the market, I will be advising that somewhere right around the $76 level will seems more appropriate to secure this current position, as we want to give room for price action to breed in anticipation of a potential trend continuation to the upside. And for those who had missed out on this opportunity, well, we are going to be looking at this market structure from a technical standpoint to decipher if the market is going to be giving us a second chance to join a potential rally to the upside. So in that regard, one thing I would want us to be doing, first of all, ensure you have secured your position. And now we are going to be diving back into the daily time frame to see what is really going on in this market from a technical standpoint, after which we shall be coming back into the 1 hour time frame to determine what we are going to be doing for today. So the first thing we did yesterday was to look at the daily time frame, and on the daily time frame, this is what we were able to identify. I was able to have a clean chart on during the course of the weekend so that I can have a re-evaluation of what is really going on in the market. And the first thing I was able to identify here is that price action has been bearish in the last 7 to 8 months. So throughout the course of the later part of last year, we saw our selling momentum grip this market, and as a result of this, I was able to connect a series of lower highs here, which has given us that resultant bearish trend line that you can see on your screen right now. And this has continued to emphasize the strength of the sellers at this point. But something interesting happened during the last quarter of last year, and that was the fact that price, as soon as it dropped below the $82 level, we begin to see a tussle between the buyers and the sellers, and this led into this huge consolidation phase between the $80 level and the $82 area to further emphasize the indecision in this market. And if we look at what has been happening here since the month of December, you will see the struggle of buying pressure coming in this market to push price out of the structure, as price action has been finding higher lows here. And if we do connect the series of higher lows, we'll definitely have this bullish trend line to give us a clue into buying pressure trying to break out of the structure. But unfortunately for the buyers here, you will see how the $82 level has been negating all attempt by the buyers to break out of the structure. And with the hopes that we might be having a strong demand in oil prices following the Republic of China's lifting of the COVID restriction in the economy, we were thinking that there's going to be a demand, considering the fact that the Chinese government is the highest importer of oil in the world. So we were expecting that demand to increase, but we are yet to see any traction in that regard. However, during the course of last week's trading session, we saw some bullish momentum again resume around that bullish trend line here, bringing price back into the $76 level. And as you can see here in the last 3 days now, price action has been trading right around the $76 area. So for the week, we have identified the $76 level as a level we want to be using to guide trading activity. And what this simply means is that if price action trades above the $76 level, we want to be comfortable in our buy position. And if price action drops below the $76 area, we'll definitely want to be looking out for selling opportunity, as we are at equilibrium at this particular point in time. And the next thing we did here is to understand how participant is going to be reacting to the $76 level here since the beginning of the week to decipher where price might be heading for the week. And as a result of this as a result of trying to identify the potential trading opportunity for the week, we needed to scale down to a much lower time frame so that we can have a microscopic look into what is really going on around the $76 level. Now, before we scale down to the 1 hour time frame, I would like to share with you some simple setups I was able to identify on the 4 hours time frame. Now, if you look at the 4 hours time frame here, it is quite obvious, definitely, which I shared on the daily time frame, that price action has been caught within a consolidation phase here in the last 3 months. But if we zoom into the current structure, that is what has been happening here since the month, since in the last couple of weeks, that is in the last 2 weeks, we can see how price action has been bearish. And to further emphasize the strength of the sellers here, if you connect the series of lower highs, this is what we were able to identify here, as we had a beautiful bearish range to further emphasize the strength of the sellers at this particular point in time. But something interesting happened during the later part of last week, as we saw price action break down that important key level we identified on the daily time frame, that is the $76 level. And as soon as price got into that strong psychological level at the $74 area, what we saw here was quite interesting, as we begin to see buy pressure resume from that area, and this actually lasted about 16 to 18 hours before the bullish traction began. And we were lucky enough to be part of this buy position last week, as we took advantage of this move right above the $74 level, bringing price back into that bearish range that we identified earlier. And what happened immediately after price got into that zone was impressive, as we saw price action drop significantly back into that support zone. But what you will see here is that price was unable to break the previous low at the $74 level, giving us a higher low, which from a technical standpoint is a signal that buyers are gradually coming in this market. And another thing about that candle is the fact that it closed in the form of a hammer candle, which from a technical standpoint is a strong signal that buyers are very, very strong at this juncture in this market. And what we saw afterward was price breaking above the trend line, which also shares a confluence with the $76 level, whereby we had a situation where price was trading above the $76 level. And you all know from a technical standpoint, whenever we do have a breakout of a structure like this, we expect that one point in time price is likely going to come back, do a retest of either the trend line, and then look out for buying pressure around here to incite another wave of bullish momentum. And if you look at what has been happening here in the last 24 hours, it appears that we're having that kind of setup happening at this point as we have a breakout of the trend line. Price came back to do a retest of structure, and in the last 24 hours we have been witnessing buy pressure from the $75.25 level, which also shares a beautiful confluence with that bullish trend line that we identified at the beginning of the week to further emphasize that buyers are likely going to be coming in this market. And lucky enough, we were able to take advantage of a buy opportunity at the breakout of the $75.60. But with the current structure here, we really need one more breakout to further emphasize the strength of the buyers, and that is the breakout of the $76.68 area. As you can see here, since the beginning of the week, I think since the later part of last week, we saw this is where price closed during the course of last week's trading session, and it began around this area this week. Let me scale down to a much lower time frame so that we can see how price action has been reacting to the current structure, which is currently ranging within that key level we identified on the daily time frame at the $76 area. Now, as you can see what has been happening here since the beginning of the week, we can see how a consolidation phase is wrapped around the $76 level, which we identified on the daily time frame as a key level that we shall be using to guide trading activity for the week. And now we have a situation where price has been bullish since the breakout of the $75.80 level, respecting that bullish trend line somewhat in a way. And at this point, like I was stating on the 4 hours time frame, we need another significant breakout of the structure to give us a very beautiful confirmation that we are going to be buying the US oil, and that is the breakout of the $76.68. Now, you see what I said here at the beginning of the week. The $76.68 level has been the highest point price has ever been for this week, hence it became our resistance level for this week. So what we want to be saying to add more position to our existing trade, and for those who had missed out on that opportunity yesterday, well, we think that the market will be giving us a second chance in the form of a breakout retest of the $76.68 level to trigger another buy position on this one. So anywhere right above the $76.68 level would be a beautiful opportunity to buy the US oil, as we would have had a situation where price has taken out all the sell position here to give us some liquidity for buyers to incite another wave of bullish momentum. So let's be on standby to catch that move as we continue to monitor price action. Then another thing that could happen here is that there is a tendency that we might be seeing some selling pressure. It can resume below the $76.68 level, and if that happens, we need not panic in our buy position, as there is a likelihood that price might come back to do a retest of the $76 level that was broken during the early hours of today. You all know from a technical standpoint, whenever we do have a breakout of structure, there is always this likelihood that price will come back to do a retest of that structure. And if this citation of buying pressure resumes above the $76 level, we'll definitely want to be adding more position to our existing trade, and a further breakout of the $76.68 level will be triggering another position on this one. So on the US oil, I want to remain bullish here, so I hope that you can monitor my screen so that you can use it as a reference point when you're about to make your individual decision. Now, I had some people talking about selling opportunities on the US oil. Well, for the US oil at this particular point in time, though we have a resistant level, we have a ceiling for the week at the $76.68 level, which had rejected bullish attempt a couple of times for this week. Well, if I am going to be selling this one, I want to see price action drop significantly well in such a way that it breaks down the $75.25 level for me to be thinking of selling at this point. And the reason why I would want price action to break down the $75.25 level is simply because, one, it shares a confluence with that buy zone that we have identified here at the beginning of the week, as you can see, and it also shares a confluence with that bullish trend line that we have identified during the live session yesterday. And more or less so, it will have fallen below the bearish trend line that has been guiding bearish momentum in the last couple of weeks. So I want to see price action go through all this, breaking down that structure. And in fact, if it does break down that structure, we will need some level of patience here to look out for further confirmation in the form of a retest of structure. It could be the retest of the trend line, the 75.25 level, or as far as the 75.80 area before we want to be joining that decline to the downside. So if this does not happen, we continue to hold on to our bullish bias on the US oil. If you do have any questions regarding what I just explained so far, feel free to drop your inquiries in the comment section. So on the US oil, we have a buy stop order sitting above the $76.68 level so that we can catch that move to the upside. So moving on to the next pair here. The next option we are going to be looking at this morning is the US tech. Now, on the US tech, we had this situation figured out here yesterday where we had a buy position triggered. I told you how a buy position was triggered after identifying a flat channel at the beginning of the week. So we had a channel between the $11,960 and the $12,020 level. And with the breakout of the $12,020 level, it was a beautiful opportunity to buy the US tech. And during the live session, I was telling you how much we doubting the buy momentum here after noticing the selling pressure that we had here. So I said it's a risk worth taking. Let's continue to hold on to that bullish momentum there and see how far that momentum will go. And in addition to that structure there, I was able to identify the $12,070 level where I said a breakout retest of that structure will be giving us an opportunity to add more position. And in fact, price action did break out of that structure and moved about 85 pips in our direction before we started seeing this bearish momentum resume in this market. And in addition to that structure, we also had this bullish trend line figured out, which we said it will be serving as a yardstick for trading activity for this week. As if price continues to trade above that structure, we want to feel comfortable in our buy position. And if price action drops below that trend line, we'll definitely want to be thinking of selling the US tech, as the trend line may no longer be strong enough to hold this bullish momentum. And if you look at what has been happening here in the last 12 to 15 hours, you will see how selling pressure appeared to have taken over this market. Look at this candle here. As soon as price tested the 12,160, we saw this candle that looks more like a shooting star candle, giving us a clue that sellers are still very, very strong in this market. And if we zoom out a little further and look at what has been happening in the last couple of weeks on this commodity, you will see that price action has been bearish. And if we consider the long-term bearish momentum, with the current structure we have been witnessing here in the last 24 hours, it is very obvious that sellers are gradually coming in this market. And with the breakdown of the $12,070 level, it was a good opportunity to join that decline to the downside. And I hope you took advantage of that opportunity. But if you missed out on that, well, it's okay. I still think the market will still be giving us another chance to join that decline. And for those who are joined that decline from that level, kudos to you. You want to be moving your stop loss now to secure this current position at your entry point. Now that we have a breakdown of that bullish trend line, you all know from a technical standpoint that whenever we do have a breakdown of structure, there is a likelihood that price will come back to do a retest of that structure, and it appears price action is approaching a retest of that structure. So there is still a likelihood that we have an opportunity to add more position, or probably if you had missed out on that opportunity, there is still a likelihood that price action will come back to give us a second chance on this one. Now, another structure we have here is the $12,020 level, which if price action continues to the downside, breaking down the structure, it will definitely be welcoming additional position on this one. Then to further buttress the bearish momentum that we have here, it's very important to consider the lower highs that we have been seeing here in the last 15 hours, and to emphasize that we need to bring out our line chart so that we can have specific points of connection. And if we do connect the lower highs here, this is what we are going to be seeing. And to bring back our candle chart, do some little adjustment. This trend line here shall be our yardstick for trading activity for today. Now, how do we intend to use these trend lines to guide our trading opportunity? Well, considering the fact that the trend line shares a beautiful confluence with that $12,070 level, which was broken during the early hours of today, if price action comes back into the structure and we start seeing selling pressure around that trend line, then we definitely want to be getting ready to join a decline to the downside. And selling pressure, what I mean by selling pressure around that structure, most people have been asking me that question, that what do I mean by selling pressure? Well, selling pressure comes in the form of multiple rejection of the 12,070. That is, if price action gets into this level, most of the time we can see this very, very clearly on our lower time frame, like the 5 minutes, 2 minutes, 1 minute time frame. We see price reject this level, bring price to the downside. Price goes back again, rejects it to the downside. This is what selling pressure is. And most of the time, it normally transitions into a reversal pattern, probably your double top structure, your head and shoulder pattern. It could be a rising wedge, whatever it is. Breakdown retest of that structure in the lower time frame will be a beautiful signal to join that bearish momentum to the downside. So with the bearish trend line identified here, we shall be using this trend line to guide selling opportunity on the US tech. Now, if it so happens that the trend line gets broken to the upside, climbing above the $12,070 level, and you can see that that $12,070 level also shares that confluence with that bullish trend line. So if it so happens that price action climbs above both of the structure, then definitely this is going to be a sign that buyers are probably coming in this market, where the breakdown of that bullish trend line here will turn out to be a false breakdown. So what we are going to be looking forward to, if price action breaks above the 12,070, is to remain patient. Remember, we don't want to get too excited in this kind of structure, as we have a bearish trend line which has been reflecting some level of selling pressure here. So we don't want to get too excited at this point. So if a breakout happens, we scale down to our lower time frame. What we want to be looking out for is a retest of structure, which will be characterized by buying pressure above this level. Then we want to be joining that rally to the upside. So what this implements is that we have this trend lines here coupled with that key level at the $12,070 area will be guiding our trading activity for today. So if price action trades continue to trade below the 12,070, we shall be comfortable in our buy position. And if price action breaks above that level, definitely we want to start thinking and getting prepared to join a rally to the upside. So this is what I'll be looking forward to on the US tech. I don't need to scale up to into the daily time frame on this one, as it's quite a very simple setup that we have here for the lower time frame. So let's see how this plays out in the next 24 hours, and obviously we shall be coming back here tomorrow to review how well the current position is doing. So for those who are on the sell position here, ensure you have moved your stop loss to your entry point here, as we have a beautiful confluence around that entry point where anything could actually happen. If you do have any questions, feel free to drop your inquiries in the comment section. So I will be moving on to the next pair, and the next pair we are going to be looking at is the USDJPY. On the USDJPY, at the beginning of the week, we were able to identify a channel here, a flat channel in fact, which has lasted about 18 to 20 hours now, as price action kept on trading within that range, within the 136.550 level and the 136.00 area. And if we take into consideration the momentum prior to price action being trapped within that channel, you can see that it has been very bullish in the last couple of weeks. And one thing we noted here yesterday is that we will continue to remain patient and to look out for trading opportunities at either a breakdown of the channel to give us a selling opportunity, or a breakout of the channel to give us a buy opportunity. And in fact, during the New York session yesterday, I was able to identify a simple setup here that would make us to join that rally early enough before the breakout of the structure happened. So I shared this on my public platform, where we saw this bearish trend line. Price action was trending with the intention that price will drop to this downside. But what we saw here, when we scale down to a much lower time frame, I think on the 15-30 minutes time frame, this is what I saw here, which made me hop into that bullish momentum early enough before the breakout of that resistance point happened. So when we scale down to a much lower time frame, like the 15-30 minutes time frame, this is what I saw. I saw a structure at the 136.250 with a beautiful bullish trend line after connecting the series of higher lows here. And it appears that a breakout retest of the 136.250 level will be a beautiful opportunity to join that bullish momentum. I shared this on my public platform, and we were able to join right above the structure as price action continued to find higher heights. And if you are joined from the 136.250, well done to you for being on standby to catch that move. But if you have not joined from that level and you actually joined at the resistance point of that channel we identified during the live session yesterday, well, it's okay, as you will currently be running with about how many pips in profit? About 19-20 pips in profit at this point. So it's okay. Let's see how this is going to be playing out going forward. So at this point, I will suggest you move your stop loss accordingly, secure your position at your entry point as we continue to monitor this price action. Now, going into the New York session today, what is our plans? How do we intend to trade the USDJPY for today? Well, the first thing I'll be doing here is let's scale up a little further into the daily time frame. Let's have a quick look at what is happening here. And for the sake of those who are not part of the live session yesterday, you would also be able to have a peep into what our expectations were and how we got to the point of buying the USDJPY for this week. So if we scale up into the daily time frame, it's quite obvious that price action has been bearish since the last quarter of last year. And what we saw here to further buttress the bearish momentum here is when we connected a series of lower highs here in the month of October/November, we had this bearish trend line figured out. And prior to the to last week's trading session, we had a situation where price was trading around the 135.00 level, which has been a strong selling niche in this market for I think 3 months now. So this is the 135.00 level. So we saw the breakdown of the 135.00 level here mid-month of December last year, and since then price has been trading below that structure, which emphasizes the emphasizes the strength of the sellers in this market. Now that we had a situation prior to last week's trading session, we saw price trading around the 135 level. So we were thinking that two things could actually happen from here. If we start seeing selling pressure resume below the structure, price action could probably respect that trend line one more time, hereby crashing to the downside. And however, if price action breaks out of the 135 level, that would be a beautiful signal of a potential trend continuation to the upside. And thank goodness last week we were able to position ourselves in such a way that we caught that move at the right time. I think we bought it above the 134.150, somewhere around here, after price action broke out of a channel that we identified at the beginning of last week, and we were able to take advantage of some 400-500 pips thereabouts, as we had multiple entries on that one. Now going into the new week here, we had the situation where price was trading above the 136.00 level. And if you remember what I told you yesterday about the current structure, I said there are two possibilities that we want to be looking out for based on the current market structure at that point in time. And one of the things is, from a technical standpoint, whenever we do have a breakout of a significant structure like the trend line here, there is a likelihood that price action will be going through a retracement, probably into that structure to retest it to incite another wave of bullish momentum. But what we saw here was not that did not happen, as we were expecting. If a reversal pattern happens here, then we will be joining a decline. But if the structure here transitions into a trend continuation pattern, a breakout of the structure to the upside will be confirming that trend continuation, and we'll definitely want to be joining that. And if we look at things here, we need to understand what is really going on around that area. And because of this, we scale down to the lower time frame where we identified that flat channel that you saw there. So I will be going back into the 1 hour time frame, since we all understand how we got to this point based on that current structure. So right back to the 1 hour time frame, this is what we have here, and price action has broken out of the 136.550 level. And what we are going to be doing now is to remain patient here, especially for those who had missed out on this opportunity. There is still a likelihood that price will do some retracement back into structure, which was broken during the early hours of today, to incite another wave of bullish momentum. And remember that the structure at the 136.550 level shares a beautiful confluence with the resistant level of that ascending channel we identified on the 4 hours time frame. For those who are not part of our live session yesterday, I will quickly run through the 4 hours time frame so that you can see what I'm talking about here. So on the 4 hours time frame, we were able to capture trading activity for this month, and it was very obvious that price action has been bullish. And as you can see here, price action transitioned into this ascending channel that we saw here. And look at what happened in the last 24 hours. Price action broke out of the resistance point. In fact, that's the second time price action will break out of that resistance level. This was the first time here. Price action came back to do a retest to structure to incite that bullish momentum that you can see here. So this is the second breakout of that trend line. Now, what we are going to be looking forward to is to see how to capture or join a potential rally from this current structure. So like I said, on the 1 hour time frame, we might likely see a situation where price will drop back into the trend line, which also shares a confluence with the 136.550, where we shall be looking out for buying pressure on our lower time frame to join that trend continuation to the upside. So that is one scenario we are going to be looking forward to here. But one thing I would like to say here before I go into the second bullish scenario here is that if it happens that price action drops below the 136.550 level, as you can see, it has dropped below that bullish trend line as well. If it drops below that level and we start seeing selling pressure below the structure, this will be a beautiful sign that sellers have come into this market, and it might be a long sell here, as price action might drop to as far as this bullish trend line that we have identified around the 135.300 and the 135.00 level. So during the New York session today, if we have such a situation where price drops back below the 136.550 level, we shall be looking out for selling opportunities below that structure, with the TP target sitting at anywhere around the 135.300 and the 135.00 area. So this is another scenario we should also take into consideration while we monitor price action. So the second scenario I was saying earlier that will be guiding another bullish momentum here is if we start seeing a trend continuation pattern somewhere right around the 136.750 level on our lower time frame. Then we should position ourselves at the resistance point of that channel to join that bullish momentum. So to have a better understanding of what is going on here, we want to be scaling down to a much more lower time frame, probably the 15 minutes time frame, to see what is going on around that area. Now, when we scale down to the 15 minutes time frame, this is what you will be seeing on the 15 minutes time frame. So following the impulsive move that broke out of that 136.500 level, we have been witnessing some consolidation phase here, which has lasted about 3 to 4 hours between this channel here, forming a channel. So we might likely see a retracement to the downside, or probably a breakout of structure to give us a trend continuation pattern. So at this point, ensure you have moved your stop loss on your previous buy position to secure this current buy position that is running right now, while we anticipate another opportunity to join a rally to the upside. And if it so happens that price drops below the 136.550, like I explained on the 4 hours time frame, then definitely selling pressure below the 136.550 will be welcoming selling position. So now with this flat channel, with the consolidation phase we have here, so I'll be bringing out my line chart, and one thing we want to be doing is to identify the structure. And now we can see we have lower lows here. I would like to use a 1 pixel, and if we duplicate this and bring it up here, you can see that it shares. All right, so we have a flat channel. Sorry, I keep saying flat channel. Why do I keep saying flat channel? All right, so we have this let's call it a descending channel in the meantime, which you could also call a flag pattern, because of, if you take into consideration, if you put this impulsive move into the picture, we could be seeing it as a flat channel here. Now, with the structure that we have here right now, it's important that we remain very patient at this point, as we need some breakouts to give us a clue of where price action will be going from this current structure. And to further emphasize that, I want to identify a resistance point which will share a confluence, and we have a strong psychological level here around the 136.750, which I will definitely be using to guide a bullish momentum from this current structure. So let me label this one for the sake of clarity. So 136.750 level, I'll give this let's make this a little bit smaller, top right hand side of the screen. Okay, then let's have a support level for that. I think the support level would be most appropriate around this area. We'll do some readjustment when we get back to our candle chart. Okay, we should have it somewhere around here. So we have a support level here, and we have a resistance point here. So support level falls within let's see, 136.620, I guess. Okay, so let's readjust this. 136.620. all right, so we just place it at the bottom right hand side so we can have a clean chart. Beautiful. So this is what we have here right now. So you will agree with me that price is going through a consolidation phase right now. There is an indecision here, but one thing you will observe is that we have been witnessing some buy pressure resume above the 136.620 level. Look at, we have an hammer candle here, we have buy pressure resume here, we have buy pressure again from the structure. So I'm of the opinion that price action this current structure here could transition into a trend continuation pattern. And if it does transition into a trend continuation pattern, where do we want to be positioning ourselves to join that trend continuation? Well, you all know what we are going to be looking out for above the 136.750. So a breakout of that structure will be triggering another buy position on this one. So let's be on standby to catch that move when that happens. So a breakout retest of structure will be confirming that price action will be continuing to the upside. Now, if price action breaks down the 136.620, what do we look out for? Well, if price action breaks down the 136.620, well, from a technical standpoint, we want to be joining a sell opportunity from that level. But if we take into consideration this current market structure, citing what has been happening here in the last couple of weeks, it will be very, very risky to join a decline from that level. So we will need some further confirmation to join that decline to the downside. So if it so happens that price action breaks down the 136.620 level, I want to see price action drop to as far below the 136.550 to give me a signal that we might be having a retracement from this current structure. And in fact, if the breakdown happens, we'll still need further confirmation before we could be joining that decline to the downside. And the confirmation is likely going to come in the form of a retest of the structure, followed by selling pressure below this level on our lower time frame before we can join that decline to the downside. And if I extend this trend line a little further into the future, it could be another basis for guiding trade selling opportunities if our price action ever breaks down the 136.550. So like I told you on the forward time frame, I told you that breakdown of the 136.550 level will definitely be triggering a sell position, but we need further confirmation like a retest of that structure to join that decline to the downside. But with the current structure here and considering the strength of the dollar across the major pairs here, I doubt if a breakdown of the 136.550 will happen, as I continue to tend and lean towards a breakout of the 136.650, hereby turning this current structure into a trend continuation pattern. So if you had missed out on the opportunities that we took advantage of yesterday, well, you can position yourself right above the 136.750 level to join that trend continuation to the upside. So I hope you'll be on standby to catch this opportunity as we continue to monitor price action. If you have any questions regarding what I just explained so far, feel free to drop your inquiries in the comments section. So moving on, we are going to be moving on to the next pair. And the next pair, I definitely will be the last pair for today, I guess. Will it? Oh, we still have two more pairs to go, right? Do we? I think I talked about the GBP USD yesterday as well. Did I? I'm not sure. Okay, so let's move on to the XAUUSD. So the XAUUSD is one pair we have been trading since yesterday. And the current structure is projecting a sell momentum from this current area. Now, what was our expectation during the live session yesterday? Let's quickly run through what our expectation was. So during the live session yesterday, we were able to identify a consolidation phase in this market as price action ranged with trade within the range between the 1,814 level and the 1,807. Now we had the resistance point for the week at the 1,814 level here, and we had a support level for the week at the 1,807. And you all know what we look out for whenever we have this kind of channel. We remain patient to wait out for either a breakout of the structure to give us buy opportunity or a breakdown of the structure to give us selling opportunity. And in fact, we had some bullish opportunity during the early hours of the New York session yesterday, as we had price action breakout retest of that structure. And in fact, price action moved about 600 pips in our favor before the selling pressure resumed below the 1,820 level. And to further buttress the importance of the 1,820 level, I would like to refresh our memories on what we talked about yesterday considering that structure. Now, if we scale up a little into the 4 hours time frame, remember we identified this bearish zone as we saw how price action has been playing out here since the beginning of the month. And what we saw here is a bearish range after connecting the series of lower highs. And as you can see here, the bearish momentum continued throughout the month, breaking down structures like the 1900, structures like the 1860 level, and finally the 1820. And if you remember what I told you about the 1820 level at the beginning of the week, I told you this is where price action started the year. So the year started at the 1820 level when price action broke out of that strong supply zone around that area to inside that bullish momentum we have been enjoying since the beginning of the year. Now, the crash in the price of the gold now has brought price to break down the 1820. And one thing about that breakdown, let me zoom in so that we can see things more clearly here. I told you yesterday that since we have a breakdown of the 1820, that the buy pressure we are noticing here could likely be a counter trend opportunity, which will turn out to be a retracement of that previous impulse leg where price action will come into the 1820 area, an area which also shares a confluence with that bearish trend line that we identified earlier, and the resumption of selling pressure below the 1820 level will be welcoming a sell position. Remember, I told you that yesterday. I told you that once soon as price gets into the 1820, all of the buy positions we have, we should secure it by moving our stop loss accordingly to secure that current position. And I hope you did that. And as you can see, what happened here during the early hours of today, price action broke down that bullish trend line here, the bullish trend line that has been supporting bullish momentum since the beginning of this week. So we have the breakdown of that bullish trend line to give us a hint into the possibilities of selling momentum coming in. And we saw the breakdown retest of that structure. Price action broke down, retest, respecting that bearish trend line. If you connect the series of lower highs since price action started rejecting the 1820 level, you will see a beautiful trend line, which will definitely going to be a yardstick for our trading activity for today. So with the breakdown retest of that structure, we had a sell position triggered below the $1,814.50 level, and I hope you are lucky enough to be part of that position. And if you did, congratulations to you, as you will currently be running with a minimum of 500 pips in profit at this point. So for those who are joined this bearish momentum at the breakdown of the 1814 level, kudos to you for being on standby. The next thing I'll be advising us to do right now is to secure this current position by moving our stop loss to our entry zone to secure this position, and let's see how price action will be playing out going forward. Now, in addition to that structure, I have told you we have a bearish trend line here, which we have figured out. If you had missed out on that opportunity, well, I hope that price action will come back to do a retest of that trend line, where we look out for selling pressure around that trend line to give us an opportunity to join that decline to the downside. So if price action comes back into this trend line and the appearance of selling pressure comes in from this level, I would advise us to add more position at the breakdown retest of the $1,810 level here. So if price action, this selling the 1,810 level will only happen if price action retest this bearish trend line. So we want to see a breakdown retest of the 1,810 level to add more position to our existing trade. But if price action does not come back into this trend line, then definitely we are going to be looking forward to a breakdown retest of the 1,810 level to join that decline to the downside. Now, one thing I would like to call our attention to about the 1,807 is this. We are not placing a sell stop order below the 1,807 at this particular point in time. Not at all. What we are going to be doing here is to wait for the breakdown of the 1,807 to happen first. Then we scale down to our lower time frame to look forward to selling pressure below the structure, after which we can join that decline to the downside. And why have I said this? Well, if you look at the structure and go to what happened during the early hours of yesterday, you will see how the 1,807 was initially a strong buying niche for participants in this market. And if you look at what happened a couple of hours ago when price action got into the 1,807, you can see the sharp rejection of that level. And what this simply tells us is that there are traces of buyers in this market. So we don't want to get trapped in this kind of situation. So we need further confirmation where price action is going to be taking out all the buy positions here, then giving us more liquidity, which will be reflected on the chart as a retracement, selling pressure below the structure, after which we want to be joining that decline to the downside. So this is the only way we want to be adding more position at the breakdown of the 1,807. So in order to catch that opportunity, we will need to scale down to a much lower time frame to look out for this retest of structure to join that decline to the downside. Now, there is a catch to this. In as much as we continue to look out for selling opportunities here, we cannot ignore the potential of a buy opportunity from this current structure, as the beginning of the week has given us a clue of the strength of the buyers in this current market. You can see price has been consolidating between the 1,820 and the 1,807 in the last 4 to 5 days now. So, and with the appearance of buy pressure above the 1,807 and a sharp rejection a couple of hours ago of the 1,807, we could see a momentum, a bullish momentum build up behind the scenes. Now, if this bullish momentum gets stronger in such a way that price was unable to break the previous low here and price action continue to find higher highs on our lower time frame, then definitely a breakout of this trend line will be a beautiful signal for a bullish momentum. So if price action breaks out of this bearish trend line, as you can see, the trend line also shares a beautiful confluence with the $1,814.50 level, a level which was initially our resistance point for this week, where we saw the breakout retest at the beginning of the week. So there is a likelihood that if a breakout of both the bearish trend line and the $1,814 level happens, we might be joining a reversal pattern from that structure. Please note that this is going to be valid only if price action is unable to break the previous low that we have here at the $1,807 level. So we have the 1,814 area for buying opportunity here. If price action ever breaks out of that structure, we join to the upside, and a further breakout of the 1,820 level will be welcoming additional position to our XAUUSD. So these are my views here on the XAUUSD for today. I hope that I was able to simulate all the possible scenarios that is likely going to be happening today. So I hope that we be on standby to catch any of this opportunity as we continue to monitor price action. So I think this is the last pair we are going to be treating for today, and for the sake of those who are not part of the beginning of the session, I will be doing a quick recap of what we talked about today so that we can all be on the same page here. So on the US oil here, I told you we already have a buy position triggered right above the $76.68 level. I hope you have your position triggered right now. Beautiful. If you had done that, kudos to you. So we should be having our stop loss somewhere between the $76.20 and the $76 area to reduce our risk on this buy position that we have here. So for those who are joined from the $75.80 level, so currently you will be having two positions running at this point. Now for the first position we took advantage of at the breakout of the $75.80 level, we want to be moving our stop loss for that particular position to somewhere around the $76.20 level while we wait out for this current position to play out going forward. Now, since we have a breakout of the $76.68 level, there is still a tendency that price action could still come back to do a retest of that structure to incite another wave of bullish momentum. Please put that also in mind, as you might want to be adding more position so that you can maximize the profit for the US oil for this week. Now that we already have a breakout of that resistance point for this week, this is a beautiful signal that we might be going bullish on this one. So don't let us sit on our horses here, as there is still tendencies for anything to happen. So that is why I always emphasize on ensuring that you secure your current position as we continue to monitor price action. Then another thing to make things a little bit easy for us to be able to secure our positions on the US oil, if we connect the series of higher lows here, I'm not sure if I'm going to be getting this right. I'm not sure if the pivot lows here are quite enough to be able to identify a temporary bullish trend line on this one. Okay, so let me see what I can do here. All right, I think we can use this also to guide our hold on a second, let me use this. We have this low and then this one here. So we can use this trend line as well to guide our trading activity. So if price action continues to trade above that trend line, we shall remain comfortable in the buy position that we have here. But if price action breaks that trend line, it's going to give us a signal, an indicator that we might be losing out on this buy position. So we should ensure that we are moving our stop loss accordingly in that regard. So that is why I have that trend line, so that we can use it. It will tell us quickly if we are losing out on that bullish momentum on the US oil. So I wish you best of luck on this one as I move on to the next pair. So the next pair we're looking at today was the US tech, and initially we had a buy position running at the beginning of the week, but we were taking out of those positions with some small profit, and in a worst case scenario you might be taking out at break even. Now we added a sell position as soon as price broke down this bullish trend line here. And one thing I stated here today is that we still have a tendency of a selling momentum coming in. And to guide the selling momentum, we already have this bearish trend line figured out here after connecting the series of lower highs. So I said the bearish trend line here will continue to guide our bearish momentum. And since we had the breakdown of the 12,070 level, breakdown of that bullish trend line, from a technical standpoint, we expect that price will do a retest of structure. If that happens and selling pressure resumes below the $12,070 level on our lower time frame, it will be a good opportunity to join. That is, if you had missed this one, to join to the downside. And a further breakdown of the $12,020 level will be welcoming additional position for a sell position. Now, I said this: if it so happens that price action climbs back above the $12,070 level, which happens to be above the bullish trend line that we identified earlier, it will be a beautiful sign of a bullish momentum. But I told you we are not jumping in right away, as we need further confirmation to guide our trading activity, and this will definitely come in the form of a retest of structure on our lower time frame. Then we could join that rally to the upside. So we have this trend line to guide our trading activity for today, both this trend line and the 12,070. And this simply means that if price action continues to trade below the 12,070, we remain comfortable in our sell position. And if a breakout of the 12,070 happens, we shall be comfortable in our buy position. So let's ensure that we use the structures to guide our trading activity for today. You can munch my screen so that you can use it as a reference point when you're about to make your individual decision. Then we went on to talk about the USDJPY, which has been bullish since yesterday, and I told you we have about 2 positions running here after taking advantage of one at the 136.200 level and the breakout of the 136.550. And to further buttress a possible trend continuation to the upside, or probably getting ready to join a decline, we were able to identify a beautiful channel on our lower time frame between the 136.750 and the 136.620. And how are we going to be using this channel to guide trading activity for today? Well, we shall be scaling down into the lower time frame. So on the 15 minutes time frame, this is what we were able to identify. And I told you how much I'm leaning towards a bullish momentum on the USDJPY, as this consolidation phase here could turn out to be a trend continuation pattern. And this will lead to a breakout of the 136.750 level, retest of structure, with buy pressure above this level on our lower time frame to confirm that trend continuation to the upside. So this is what we are looking forward to buy the USDJPY. However, I said if price action breaks down the support level of that channel to the downside, that is the breakdown of the 136.620. In this kind of scenario, we are not going to be selling the USDJPY as we need further confirmation to guide trading activity. And I said what we'll need to sell the USDJPY at this point is to see price action do a further breakdown of the 136.550 level, which I said we are not joining right away. We are not getting too excited at the breakdown of that structure. We need further confirmations before we can join that selling opportunity, which will definitely be coming in the form of either a retest of the trend line here or the 136.550 level, or it could go as far as the 136.620 area. But most importantly, we want to be seeing selling pressure below the structures on our lower time frame to join that decline to the downside. So the only way we are going to be selling the USDJPY is to see price action break down the 136.550. But I doubt if that is going to happen. But if it does happen, we want to be on standby to catch that move. Then we went on to close the day with the XAUUSD for today, which we've been enjoying a sell momentum in the last couple of hours here as price action continued to drop to the downside. And for those who had been part of the selling opportunity this morning here, kudos to you guys, as you would currently be running with about 600 pips in profit. Secure your current position, like I said, as we continue to monitor price action. And I told you how we have a simple structures here which we definitely want to be using to guide trading activity for today. And one of the structures is the bearish trend line here, which we expect that if price action continue to trade below this trend line, we shall be comfortable in our sell position. And I also told you the possibilities of the potential that price action still has a tendency of coming back to retest the trend line here, and if it does happen, selling pressure below the trend line or rejection of the trend line will be giving us another opportunity to add more position. And I told you that if price action retests this trend line during the New York session, a breakdown retest of the 1810 level will be welcoming additional position to our existing trade. But if the retest of this trend line did not happen, don't consider selling below the 1810.50 level, but you can wait at the breakdown of the 1807 here, breakdown retest, before we want to be joining a decline to the downside. And I emphasize here that we are not just having a sell stop order here, as we need further confirmation, considering the fact that we have noticed buy pressure coming from that 1807. And a couple of hours ago, we saw a sharp rejection of the 1807, which is giving us traces that there is a strength of bullish momentum in this current market. So we need further confirmation to happen before joining that decline below the 1807. And I said what we are going to be looking forward to is a breakdown of the structure. Scale down to our lower time frame, look out for selling pressure below this level to join that decline to the downside. Now, there is a catch to this current structure. I said, in as much as we're looking out for selling opportunities on the XAUUSD, we should not ignore the fact that buyers could actually come in this market. And if we take into consideration the buy pressure we have been witnessing here since the beginning of the week, price action may not break down that structure. That is, we could have a higher low here, and if we have a higher low from a technical standpoint, that is a beautiful sign that buyers are gradually coming in. Now, to guide a bullish momentum here, I have told you that we need price action to break out of the $1,814.50 level, which also shares a beautiful confluence with this bearish trend line to give us a signal that buyers are coming into this market. And remember, we are not getting too excited at the sight of the breakout. We need to remain patient as we need further confirmation in the form of a retest of structure to join that rally to the upside. And a further breakout of the 1820 level will definitely welcome additional position on the XAUUSD. So on this note, I want to wish every one of us best of luck during the New York session today. I hope I was able to simulate all the possible scenarios that is likely going to be happening on the chosen instrument that we have been monitoring since the beginning of the week. Thank you very much for being around with me. I really appreciate your attention. I can see Mia Gigi. Good afternoon to you. Hope you're having a wonderful day. And please remember not to get too excited whenever we cite breakouts of structures like I've explained during the session. Whenever you cite a breakout of structure, remain patient, scale down to your lower time frame, look out for retests of structures supporting the direction of the breakout, after which you can join that momentum. So do have a wonderful evening, everyone, and I hope to see you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review all the instruments we have been monitoring and at the same time get ready for the New York session tomorrow. Do have a wonderful evening, everyone. Bye-bye.